Hi there, this is Helen Tarrant, and today I'm going to cover for you how you can use equity in your current residential portfolio and leverage it to a massive commercial portfolio while the portfolio still pays for itself and still gives you a little bit of positive cash flow in this market, but will give you a lot of positive cash flow in years to come, right? Because it's all about having that retirement plan. And if you do like what I'm telling you, there is a link for you to book in for a strategy call, because it's all about us personalizing the journey and helping you through that process as well. So on that note, what exactly is equity? Now, equity is what happens when you buy a property, say maybe 4, 5, or even 2 years ago, and maybe you bought the property for $500,000 or $1 million. It doesn't matter how much you bought it for, but now a few years down the track, the property's worth more, right? So you bought it for 500 and now it's worth $1 million. Now between the 500 and $1 million, there's $500,000 of equity. Now you may not be able to use all of the equity because the bank is not going to allow you to borrow against the whole 500,000, but they may allow you to borrow anywhere from 60 to 80% of that. So you're going to have somewhere between $300,000 to $400,000 as a deposit, or you can draw that down, or you can draw against it for a deposit for your next property. Now, a lot of people might think I can buy residential or I can buy commercial. Which one should I choose? And in this video, I'm going to share why you should buy commercial. Now, why you should buy commercial property is because someone needs to service the deposit. A lot of people don't tell you that, because if you took that 300 or 400,000 and you decide to buy a residential property, you're going to find that you're going to be negative again. Most of the time when you buy a residential property, you're going to be negative in the beginning and you're going to spend several years trying to make it positive or neutral. Then you draw down on the equity and you buy another property and you're negative again, right? And if you don't want to be in that position in this current market, especially with the interest rates going up and some instability and the interest rate holding, you need a property that holds its own. And commercial property is one of the only properties in this market that holds its own and also gives you a little bit of positive cash flow, gives you the growth you want, and gives you back-end planning for financial freedom in a short space of time. So you take that equity, that 300, 400,000, and you leverage it into a commercial property. But you might say, hey Helen, I can't borrow anymore because my serviceability, once I draw out that 300 or 400, is gone. It means that I can't physically service the debt on the property anymore. So how do I then continue to grow my portfolio? Well, the simple thing is, in commercial property, there is a lease stock loan option that doesn't exist in residential, but exists in commercial and is only specialized in commercial. And what that is set up for is people who cannot service, but still want to continue to buy, but they want a tenanted investment property. So you're not going out there and buying a vacant warehouse, a vacant shop, or a vacant office. You're going out there buying a commercial property with a tenant in place. So that tenant needs to be on a lease. There needs to be a good, secure lease, and the tenant needs to have an established history. So the tenant is not just fly by night coming in here, setting up a pop-up shop and then going in a few months, nor are they going to say, when we used to have those COVID clinics or like little op shops that popped up, it's not going to be like that. It's going to be something like a dental surgery, even a hairdresser, a beauty therapist has been there for a while. It's going to be a law firm, an accounting firm, a restaurant or a cafe, established history, and they're on a lease. Now the lease is what binds the tenant to the property, and the lease is typically 3 or 5 years with many options. So there may be 3 by 3 by 3, 5 by 5 by 5. So all in all, it's 10 years or 15 years or even longer. And what the bank is going to do is use that lease that binds the tenant. They're going to see what rent the tenant pays, and they're going to use that to service the loan, which means that you don't have to worry about servicing. So all you have to do is draw down the equity, 300,000 or 400,000 from the equity of your residential property, and then move that over to commercial property. Buy a commercial property anywhere from $800,000 to $1 million using that money or more, depending on your ability to leverage, and you use a lease stock loan. A lease stock loan is going to mean that you don't have to service. The tenant who's paying the rent is going to actually service or actually pay your mortgage. So the tenant is paying your mortgage. How good is that? That means you can sit back, relax, don't have to worry about a thing, and let the tenant pay your mortgage going forward. Now, how does that work? Well, it simply means that if you're buying $1 million commercial property, your tenant may give you anywhere from $60,000 to $70,000, $75,000 in net rent. And when I talk about net rent, I mean rent that comes into your pocket after all expenses and outgoings have been taken out. That means that there is no insurance you have to pay. There's no land tax. There's no management fees. There is no strata fees you have to pay. None of those body corporate fees. All of that is taken care of by the tenant. What goes into your bank is $60,000 to $75,000, depending on where you buy, the returns you're getting, and you're going to use that to pay the mortgage. Now, one of the great things about commercial property on this lease stock loan or any kind of commercial property out there that is truly tenanted and a defined investment stock is that the tenant is able to, with their rent, should be able to cover the cost of that commercial loan plus that drawdown on the equity that you just had. Remember the deposit 300,000 or 400,000? Well, the tenant, their rent should be more than enough to cover the commercial property loan plus that deposit loan. So in effect, you've got nothing to pay yourself. Nothing comes out of your own pocket. The tenant takes care of all of that. And if you do it right and buy in the right areas with a high enough yield, you'll get a little bit of positive cash flow in this current market. So for example, if you're drawing down your equity, so let's say that you got your 500,000 and the bank allows you to draw down 400,000, right? Allows you 400,000. So that 400,000 may have an interest rate of 6.5%. Now 6.5%, you're gonna go, well, that's a lot out of my pocket, right? That's almost probably close to not quite 20,000, but about $15,000 to $18,000. I don't want to be putting that out of my own pocket. That's $300 a week that I don't have. Now, if you buy a residential, that's where you have to come out with that $300 out of your own pocket. If you buy a commercial, you don't have to, because the commercial property rent that comes in will be able to pay that $300 a week plus the loan on the commercial property, which means that if you're getting a $400,000 deposit on a lease stock loan, you can probably get about $1 million, sometimes a little bit more, $1 million in a loan. So altogether, it's $1 million. So 65% LVR, so 650,000 in the commercial loan, and the 35%, which is 350,000 in your deposit. So altogether, it's $1 million. And if the interest rate is 6.5% across both the residential and the commercial, and this is a tip, commercial property at the moment is sitting sometimes below residential rates at the moment, and sometimes is sitting at the same, right? So you're actually getting a better deal by investing in commercial. So let's say it's 65,000 for the whole million, 65,000. If you find a property, the tenant that pays you $65,000 in net rent, that's after all expenses, the tenant effectively covers both the deposit payment of $300 or so a week plus your mortgage on the commercial property. Now, one more from there, if you found a tenant and a property that the tenant is paying $70,000 a year in rent, and it does happen, and what you're going to find is that the tenant pays for all of the mortgage plus give you $5,000 in passive income in your pocket. And you're thinking, wow, the tenant's paying you for the privilege of owning a property rather than you going to work to support your tenant and their lifestyle, which is what happens when you own residential property. And then you're thinking, well, how does it work for me to leverage from there on, right? Well, there's certain things you can do. For example, your residential property is going to continue to grow. Your commercial property is going to continue to grow. As the interest rate comes down, your commercial property have rental increases each year. So you have more money in your pocket, right? Your 5,000 becomes 7,000, becomes 8,000, becomes 9,000, and eventually 10,000. Probably within a couple of years, 2 to 3 years. But on top of that, you've got the increase in value of the commercial property, increase in value in the residential property. In a couple of years, you can refinance both of them again and buy again, right? And this time you've got plenty of servicing, because remember, there's cash flow coming in from your commercial property to do it. The other way to do it is to find, and not immediate, but you may find, and you can definitely find, we do this for our clients all the time, and this is something, if you're interested, and if this is a strategy you like and you want to find out how much you can borrow, click the link below and book in for a strategy session, because we can personalize this and work out exactly what that pathway is for you. But if you go and have a property that got a tenant right now, still paying rent, but has potential in the future to have more lettable areas, so maybe there's more things you could add to it, like an ATM, a signage on top, an extension at the back, storage you can create for them. Sometimes I've found properties for clients where they have land at the back where they're putting shipment containers, just literally shipping containers, right? So the tenant wants an area for storage, they just buy a shipping container, which is somewhere between $8,000 to $12,000, shipped on site, and that's a refurbished, like shipping it on site, drop it on site, right? And the tenant's renting that out from you, and they might be renting that out for a few $100s a week. So you're getting return on that, right? On literally nothing, right? Because it's your land at the back, right? There might be a little parking. Sometimes a tenant will say, hey, I want an alfresco dining area, so you create that for them. And ATMs, I recently put an ATM into one of my shops, and it's all about really getting a little bit more creative later on down the track with that property. Then you all of a sudden, you increase that value of that property, increase that value. Now you've got 3 different options to move forward. You've got your residential, you've got your commercial cash flow, which you can refinance as is, or you create the extension or the little uplift, the mini cosmetic uplift, and you've got another way of drawing down more equity and leapfrogging into your next property. How fast you go depends on the property, depends on your strategy, and if you're booking for a call, we can definitely individualize that for you and show you the pathway to move forward. So if you enjoyed that and you think, wow, I've got some equity, I just don't know how to access it, I don't know what the pathway is, I don't know what I should be buying, do click the link and subscribe and book in for that strategy session, and let me show you how you can profit and build a massive portfolio through commercial property just using your equity. So literally 100% finance.